Okay, welcome to another run through of the top 5 charts of the week. Starting off this week with number 1, it's the Global Container Throughput Index. It's a rather interesting indicator. It's one of my favorites actually. It's a global trade indicator, and I pay close attention to global trade because it can give you some pretty good signals or insight into the state of the global economic cycle. Now, this particular index is looking at throughput, or sort of shipping container throughput, so the number of containers that are passing through ports, and I believe there's 88 ports that this outfit RWISL track. This is the flash result, so the good thing about this is that it comes out monthly, number 1, but also comes out relatively soon after the end of the month, compared to some of the other indicators on global trade. So it comes out, well, it was out late last week, so basically we've got the latest and greatest data here. And what I find interesting about this chart, or the reason why I've decided to talk about it, is that in April and March you had this quite a significant slump there. Now obviously there's going to be Chinese New Year distortions to that. You can see the big run up prior to it and then a big drop off. But it's kind of interesting that you don't really see the same kind of sharp up and down in previous years. So if it was just purely the Chinese New Year effect, then you would have thought that you would have seen it a bit more readily here. But anyway, the fact that it has rebounded is pretty key, because if it had continued to drop off, and deteriorate or not recover at all, then that would be telling you some bad things about the global economy. It would signal problems on the horizon. But so far it just looks to be a bit of volatility in the activity data. We did actually see fairly similar kind of pattern in the weekly global trade indicators. I might actually just show that one. This was actually in last week's edition. So we've got here global trade high frequency indicators. We had this deceleration, especially in the last part of 2017, and subsequent rebound. So sort of adds weight to the idea that it is genuine, that we did see a little bit of a slump followed by a rebound. But of course, there's a few things going on for global trade. Obviously the trade wars are not helpful. The stress starting to emerge in emerging markets, and very much related to that, Fed tightening. So it's I would say cautiously optimistic, and if it's something that I like to watch in general, at the moment it's something that I'm going to be watching even more closely than usual. And not just this, and not just that one, but other indicators as well. Number 2, developed markets manufacturing PMI versus US 10-year government bond yield. There's fairly good link between the two, and good reason for that, because better PMI readings are consistent with better growth and inflation. Better growth and inflation is generally consistent with higher bond yields. And the big happening here is just the rolling over of that developed market composite. I would note that we did see, not the same magnitude, but we did see a bit of consolidation, weakening in the same indicator in the first half of 2017, which actually had its low point in June. And so we're now in June, so it's going to be interesting to see whether we have the same kind of effect where you get this re-acceleration in the second half of the year. Something to keep in mind as a potential scenario there. Number 3, the Economic Noise Index. Kind of an unusual indicator really. It's one that I've invented by just combining two other things, the Economic Surprise Index and the Economic Policy Uncertainty Index. And the way that this works is the higher the reading, the more positive the noise is. The lower the reading, the more negative the noise is. And it tends to give a better buy signal on the downside. So when the negative noise is particularly noisy, it's often a market bottom. But when it rolls over, it's certainly it doesn't always work, but there's certainly elevated risk of a sell-off or correction. So, the fact that we're hitting a bit of road bumps at the moment as we speak, and that it's rolling over again, says that there's certainly risk there at the moment, which I talked about, elevated risks in the markets in the weekly chart storm. So you're probably worth paying that attention as well. Number 4, global bear market count. This is a rolling count of countries, or percentage actually, of percentage of the 70 countries that we track that have entered into a bear market as defined by the 20% down rule. So that's basically if the market's fallen 20% off its high, then that's a kind of a rule of thumb that market's in a bear market. And you can see there at the moment that I think it's 3 years. So as of I think there was late last week, there was basically 3 countries, or 4% of the 70 countries that were in a bear market. That's Argentina, Turkey, and Brazil. And those are the ones that are key suspects in terms of sovereign CDF spread widening, currency weakness. The risk there is that those are canaries in the coal mine, so to say, and certainly Fed tightening, both interest rate and quantitative tightening, is a big risk for emerging markets. So it's one to, both find a bit of calmness or comfort in, because there's not very many countries at all that are in a bear market, but at the same time, be mindful of those potential tail risks in the bottom end of emerging markets and potential spillovers. Number 5, last but very much not least, PE10, price divided by a trailing 10-year average earnings for the S&P 600, that's small cap index, and the S&P 100, that's a large cap index. And look at the chart. It sort of speaks for itself, really. It's at the highest point ever, or at least the highest point on record, and much higher than where large caps are sitting. So it's a pretty stark chart, and I can hear a bit of noise coming from the other end of the house. The dog's up to something, so I better wrap it up at this point. And if you've got any comments or questions, put them in the section below, and otherwise subscribe to the channel so you don't miss out any future updates.